with Nikunj Dalmia.
Mr. Kumar, good morning. Thank you very much for coming. Now, just to set the tone here, SBI is not only India's largest bank, it currently owns India's largest AMC, India's largest insurance company, and India's largest credit card business. Am I missing on something else?
No,
that's a good introduction. There are many other businesses.
There are many other hidden jewels. They will come out over a period of time.
So let's hear from someone who really had a deep understanding of what's happening in the banking sector, and the consumer demand, and the insurance sector. The slowdown, what we are going through, how would you decode it for us?
Multiple factors, and I have always attributed it that we are undergoing a big churn as far as the country is concerned. There's a huge cleanup, all of us know. Cleanup of the corporates, cleanup of the banking system, cleanup of the NBFC, auditing, rating. You look at anything and everywhere we are in the task of cleaning up. So it has its own consequences, and the consequences that there is a slowdown in the demand, combination of factors. And how do we look at the future? I am always an optimist. Sometimes people say that your optimism has no basis. But I believe my optimism has basis. Once you undergo a transition, what we are seeing, or what we have seen in the last couple of years, then what is emerging is a much cleaner system. And all of us were accustomed to a certain set of governance, procedures, rule, environment. When that undergoes a change, it takes a little bit of time to adjust to the new reality, and that is what is happening. So we should not be at least pessimistic about the future, even if currently we are in a slowdown.
2 quarters ago, when the SR resolution did not happen, you said that, look, I'm looking up to the God and praying for money to happen. Look, God has heard your prayers. Money's come last Friday.
Yes, so divine interventions happen, and they happen when you pray selflessly.
If I look at the wealth what SBI has created and other banks have created in last 20 years, the wealth creation has not been large. So do you think for SBI shareholders, they need some divine intervention for SBI stock to go higher?
They don't need divine intervention. It is our responsibility, and I agree that in terms of delivering value to the, what you call equity holders, bank has not performed that well. That is a reality. Those are the numbers. But if it is about delivering value to the stakeholders, then I think that that is not appreciated as far as State Bank of India is concerned. And I am happy that today, globally, the focus is now shifting to the stakeholders' value and not alone the shareholders' value. And the day you evaluate State Bank of India in terms of the value creation for the stakeholders, then I am very confident that SBI would emerge on the top.
Let's put our hands together to that. I mean, it's such a powerful indication from the chairman of SBI that we know why SBI is not getting truly re-rated by the markets. The fear in the market is that whereas SBI is doing all the right things, the rate of change I think is visible, the rate of change in your ratios is visible, your NIMs are one of the best in the industry. The challenge and the fear is that everybody believes that SBI is too large to move. It will be difficult for them to make changes because of size and really because of other external factors.
No, size works both ways. I agree that whenever I want to implement a change in the bank, the pace of that change will be slower. But you also have to recognize that the decision-making process, despite all the criticism, is a very robust decision-making process. We don't take decisions in a hurry and later regret them. But if you today look at a State Bank of India, the way in a very short period of time it has emerged leader as far as the new economy goes or the digital banking goes. Today you evaluate us and you will find that SBI is on the top. That means that we are capable of change and managing that change well, despite the fact that there are some constraints, and but the performance is all for all to see. When again coming back to your question about like why our stock has not done that well despite all what we are doing, a very small segment of my business, which is not more than 10% of my balance sheet, and that is where our performance gets pulled down. But that is only 10%. Only thing, we are a large bank. We have a certain responsibility. Many private banks, and Udayji is sitting here. In private banking, when you are a private bank, you still have some choice in terms of selecting your business. When you are a State Bank of India, you don't have that choice. That is, again, a reality. Even a business line, if it is not generating profits for me, if I was in a private bank, I would say, we are stopping this. If I'm in State Bank of India, if I say that, tomorrow, what would be your headlines and media headlines, you can imagine.
You are giving me a bigger headline by saying that you don't have discretion to give loan. It is not out of choice, it is out of compulsion you are lending.
Huh?
That's a bigger headline for me.
No. Compulsion, there are many, and I don't want to name any segment or any business line because I don't want you to give the pleasure of tomorrow putting those headlines that Rajnish Kumar chairman says this about this segment or this. But again, I'm saying that when the world moves towards evaluating the role of an enterprise in creating value for all stakeholders, then you will not find us anywhere other than the top.
Are you getting not sleepless nights, but maybe a sweat on the brow when you look at your exposure to telecom? That is one area where we don't know where the sector, the AGR issue is headed. It's a large exposure. I'll pause after this.
One is by nature, I am a person who never has sleepless nights. So I had have enough in the last 8-9 quarters since when I've been in the chair. And if I start having sleepless night, then I will not sleep. And if I am not having a good sleep, then you can imagine that how will I perform. So the only issue here is about that, again, as a risk management, we diversify our risk for sure, across the industry, across the exposures. Again, being the largest bank, our many exposures are large exposures also. And what is large for the State Bank of India, or may not be, maybe very large for others. And when we take large exposures, we don't take those exposures just like that, right? They are based on a certain logic, certain rating, the ownership, and not XYZ everywhere we take an exposure of 10,000 crore or 11,000 crore or 8,000 crore. So telecom sector, again, it was one of the stories when bank decided to lend in this sector. This was the most sought after sector. Everybody was putting their bet on telecom sector in India. And everybody, or most of them, burned their fingers or maybe body, both. So in such a scenario, we have also lost money on telecom sector. And going forward, right now, the risk is much less than what it was looking 2 months back. But still, whatever risk is there, we are capable of absorbing any shock, if at all it comes, because we have resilience, both in terms of our balance sheet, availability of capital, and our operating profits on a quarterly basis.
But looking at the way how the credit demand is moving, the fact that you are lending and you're lending at a rate which is higher than the industry average on a very large base, do you think you have enough capital for next 18 to 24 months?
No, from where have you got this information that we are lending above the industry average? I'm not lending.
In some sectors.
No. We are, I was hearing Udayji, we are doing a risk-based pricing. So we are now much more conscious about pricing the risk, which was a very, very valid observation which Uday made about is that we are in the business of taking risk. But we should price our risk correctly. And that is the key differential which I have observed, that the difference between the private sector banks and public sector banks have been this consciousness about pricing the risk. The approach of generally the public sector banks was on expanding the balance sheet and much less attention on the profitability and operating profits. So that is changing. Now we are again using technology in a big way. We now are deploying the tools where our relationship managers today, they have a better idea that how do they price risk and not on their gut feeling and not on emotions. So we have stopped lending on emotions. Now the pricing is risk-based and scientifically determined.
So are you making a case based on data, the systems which you brought into place, the risk management is going to be like, Mr. Kotak said that for a banker, it is not important to lend money, but it is important to recover money. Are we looking at a dramatic and a structural shift in NPAs for SBI for next decade?
We have a range, and I believe that we will be able to operate within that range. This range will not be as good as private sector banks. I have already told you, we have certain reasons, certain compulsions. So it cannot be equal to what many of the private sector banks have, but it will not be as high as it used to be. So whatever is our tolerance limit, we will be able to operate within that tolerance limit.
I want to go back to the agenda of the conference, $5 trillion, aspiration to action. We had Mr. Anil Agrawal yesterday. He set the tone by saying, look, government needs to be open to divestment more. Government has no business to be in business. As India's biggest banker, where do you think action needs to be taken now, and it needs to be taken urgently for us to go back to double-digit growth?
So that is one part, and we are seeing a lot of action as far as divestment is concerned, and government is very actively pursuing it. But definitely, unless the productivity improves, we cannot have 5 trillion. And how and from where the productivity gain will come. So one is that as far as the technology is concerned, and as far as the new economy or the what we call the aggregator model or things are changing, the way we live our lives, to that extent India is not behind the curve. We are not very far off. And we have our strengths in terms of adoption of technology and innovation, and even in terms of the startups, fintech, India scores very well. So that gives confidence. Demographics currently in favor of India. That gives confidence. And the task before the country as a whole, it is a huge task. We are still at a very early stage of development, and we are not even a country where we have reached the middle level of incomes as far as the GDP is concerned. So scope is huge. Whatever sector you take, you will find that sky is the limit. Whether it is infrastructure, whether today it is waste management, whether it is your water resources management, agriculture, whatever sector you analyze and see, there's a huge demand for investment. And if that investment is channelized, then definitely we can achieve our goal of $5 trillion economy. And in this journey, government alone does not have the resources. It is ultimately the private sector investment. Its revival is crucial, and private sector investment happens when the investor is sure that with the risk which they are taking, again it is about the risk. You can be happy putting money in the State Bank of India and earn 6.5% return. But if you are taking a risk, you are starting a business, then you need return. And whether it is tax authorities or any authority, earning profits, that has to be a given. And nothing should be done that if an entrepreneur is investing money, a decent return is required. So in a hassle-free manner, how can entrepreneurship be encouraged in the country? Private investment can be encouraged in the country. Only then we will be able to reach our $5 trillion. And it is a collective effort, whether it is central government. State governments play a very critical role. It is not the central government alone. Without the active participation and involvement of state governments, local authorities, we cannot create conditions which are conducive to private sector investment. And in many sectors, private sector investment has suffered in the past. Whether you were mentioning example of telecom sector, we have example of power sector, we have example of road sector. So that confidence needs to be revived that if I invest money today, I will not regret that decision to invest.
How far are we away from a new uptick in the credit cycle? You know, last decade it was power, telecom, to a large extent metal. These were three sectors which really took the investment demand higher. How far are we away from a new credit cycle being born in India?
We are seeing some requests for project funding, but I have to admit that we don't have any large projects in pipeline to be funded. Last year we two very big projects were able to achieve financial closure. There are projects, but on a smaller scale. And otherwise, a lot of my working capital limits are lying unutilized. So it means that capacity utilization is low, and that we are seeing in various sectors also, whether it is IIP, whether it is PLF or power plants. So there is a demand slowdown which is visible and which is reflected in the utilization of the working capital limits by the corporates. Retail segment, for most of the bank, whether they are in private or public, everybody is doing well.
Why do you think this is happening? Why do you think new project demand, project finance demand is lying idle? Is it because the entrepreneur is...
I told you the reasons.
No, I mean, I'm also trying to understand, is it because somewhere there's inefficiency in the system, or somewhere the entrepreneur is generally feeling very risk averse after IBC and other things?
No, it is all about two things. One is the past experience, particularly investing in infrastructure. That has not been good. That is one thing. And today, if you want bank money, you need to show where is your equity. So that is also there. So availability of debt in the country is not a problem. The problem lies somewhere else. Problem is around availability of enough equity and the confidence. I am coming to the same point again. The confidence amongst the businessmen and investors that if they invest, they will get the desired return which they expect on their equity.
Okay. Mr. Kotak mentioned about survival of the fittest. It's happening in telecom, it is happening in airline, it will happen in real estate. Within the PSU banking also, consolidation is at play. We will see a different PSU banking sector in years from now. How do you think what will be the shape of the PSU banking sector 3 years from now?
So we will have right now the number is 12, out of which 4 are, I would say, more regional players and 8 are national level players, including State Bank of India. So I don't think that there is going to be a further change or consolidation. So we will see, apart from State Bank of India, at least 4 big banks and then mid-sized, and 4 regional small banks. What will be their future and fate? These 4 banks I am not as sure because they are regional players in a way. And no major change now I am expecting in terms of further mergers or consolidation. Whatever structure has now been envisaged, it has to be strengthened. The focus is all on execution. It will take about a year or so, or maybe little over a year, before we see that the consolidation has been done and is smoothly executed.
You mentioned that last decade, PSU banks went for a market share gain and they wanted to grow their balance sheet. The focus on profitability and basic ratios was not there. In next 5-10 years, you think State Bank of India will consciously be working at, maybe they'll lend less, but they want to focus on profitability, that will be the prime objective?
Definitely. I think there is no other choice. Again, there's a limitation that you keep on asking the government for funds or capitalization. So you have to generate sufficient internal accruals if you want to grow. The capability to raise capital from the market also depends upon your profitability and earnings. So if every day you can't go to the government for capital, you can't go to the capital market unless you have visibility and actual performance. You have to demonstrate that you will be, if you raise the capital from the market, you will be able to service that capital, and whoever puts money, they will have an expectation of a decent return on the investment. And that is where, unless the focus is on the profits and profitability, then raising the capital itself can become an issue. So we cannot, in the current environment, in the current regulatory environment around the risk capital, regulators are asking for higher and higher and higher risk capital, some sort of an insatiable demand for risk capital from the regulators worldwide. It is not only in India. Worldwide, that is the trend. And when the capital, demand for capital is so high for the risk in such a scenario, if you don't generate the returns, then how will and from where will you get the capital? So there is no other way but to focus on the profit and expand your balance sheet depending upon your capability to earn profits and your capability to manage your internal accruals to fund your future growth.
Pardon me if I'm revisiting this one. When we met last, I asked you about this buzz, but you know, the buzz that SBI will acquire Yes Bank keeps on revisiting it. Why don't you use the forum to clear the air for once and for all?
I think Uday is the best candidate to acquire Yes Bank. This is my firm belief.
No, but you did not tell me you are not acquiring Yes Bank. You pointed towards him and said stopped.
So, no, I have given you my answer. And Hindujaji is bending there. All people with deep pockets. So,
you know, my reporters are getting the cameras outside. They're getting 3 headlines today.
So, I've given you answer. I don't have such deep pockets as many gentlemen who are sitting in this room. So,
when you look back and look at the entire way how PSU banks have been recapitalized, and I think there is enough and more data which will indicate that the PSU recap has not really yielded desired returns. I mean, what government gave, it has not given the returns what we all expected. Do you think government should stop recapitalizing PSU banks now?
Now, again, the question is that government can do so and should do so. Both the things. But have we reached that stage? I'm not as sure. Some banks may still need hand-holding. We are undergoing through a mega merger. So take a decision to decide it that that's all, hereafter no government support. Taking that stand would be a bit difficult. So still there may be some hand-holding and support required from the government, maybe this transition period which is happening. But ultimately, say for example, State Bank of India, we have very clearly said that we will manage on our own. We don't need capital from the government. So like that, more and more banks, they should be able to come forward and give assurance to the government that we are capable, we are now on our feet, and kindly don't bother about us.
We talk about banks with always SBI chairman. We hardly spend any time in talking about the subsidiaries, something which markets are just not recognizing. You have India's biggest credit card company, which is India's biggest credit card company,
Yes.
which is going public. India's biggest insurance company, and now SBI Mutual Fund is as big as AMC also. SBI Life goes public very soon. SBI credit card goes public very soon. But in next 12 to 18 months, will your general insurance business and AMC business go also public?
We are still discussing, but if you ask me the sequencing, so it will be AMC first and then SBI General, because we believe that still it is about 2-3 years away before SBI General matures and its value is such which is respectable for State Bank of India to take it to the market. We don't want to take any subsidiary to the market which is a valuation of 50 or 20,000 crore. So unless we have a benchmark, internal benchmark, that at least its value should be 50,000 crore before we take it to the market. So that is our internal broad thinking, but all these things are still at a discussion stage, no firm view. But sequencing, definitely, it will not be SBI General first, it will be AMC and then General. And we expect that in next 2 years or 3 years, SBI General will command the kind of valuation we have in mind.
So last question, for next 12 months, are you optimistic? Are you cautiously optimistic, or you are outright bullish? Let's hear that roar that you're bullish.
So bankers are never outright bullish. There need to be some element of conservatives. If I don't use that word that we are a conservative banker, I will have problem. So, as a bank, I would say that we are cautiously optimistic, and we are today in a position to support the economic growth as is the need of the hour and as a leading bank in the country.
Just one last question, and promise this is the last one. When we spoke about our NPA last, you said there are two options for analysts and shareholders. Either they can wait for my NPAs to improve, or they can believe in what I'm saying, my NPAs will improve.
Yeah.
Would you like to endorse that again?
Sorry, I missed.
No, you said last time when I asked you which way is your NPA cycle moving, because you've been inconsistent with your delivery. You said two things. You said that either they can wait for the NPAs to improve and see the result, or they can believe me.
Right.
So would you like to say that again on your NPA?
So again, like as I said, that we are within our tolerance limit as far as the NPA or fresh slippages are concerned, and from this quarter onwards, the results will be visible.
Well, certainly hope so. Thank you for joining us, and thank you for
Thank you,
your
Nikunj.
valuable inputs. Ladies and gentlemen, let's put our hands together for Rajnish Kumar, Chairman of SBI.
Thank you.
Thank you so much, Mr. Rajnish Kumar.